So let's recap our risk-free rate with a very simple test. So these are Euro 10-year bond rates as on January 1st, 2021. Now, if I want to calculate risk-free rate in euros, which of those Euro bond rates will I take? We have got Germany to Greece. Germany's Euro bond rate is negative 0.58%, whereas Greece, as you can imagine, is positive 655%. Now, let's say you're a Greek company and you're having your cash flows in euros. What risk-free rate will you take when it comes to valuing your cash flows? Will it be a German rate, Finland rate, or a Greek rate? If you answer German rate, then you're right. Why? Because we are trying to calculate which country is the most least risk-free out of all of these Euro bonds. And that is Germany, of course. And that is why, even if you are valuing a Greek company having Euro cash flows, you will not take the Greece risk-free rate. You will take the German risk-free rate. Let's take another practical example to calculate our risk-free rates. The Brazilian government bond rate in their local currency reais on 1st January 2021 was 7.02%. Now, to get a risk-free rate in reais, we can use one of the two approaches. Now, the Brazilian government has issued a US dollar denominated bond, right? So the first approach is we can find the spread between the US dollar denominated bond issued by Brazil government and the US dollar bond issued by the USA. When we see in the market, the 2030 Brazilian bond denominated in US dollars has a spread of 2.05% over the US Treasury bond rate. What I mean by this is, let's assume if the US Treasury bond rate for 2030 is 1%, then the Brazilian bond in US dollars has the interest rate of 3.05%. So the spread, that is the difference, denotes the risk that the market thinks that Brazil can default on its debt. So that risk, we will reduce that risk from the Brazilian reais denominated bond rate, and we get a risk-free rate in Brazilian reais that comes out to be 4.97%. Now the second approach, if let's assume the Brazil has not issued a US dollar denominated bond, was a rating based spread. Brazil has a BA2 local currency rating from Moody's. So what we will do is, we'll take the default spread based on the CDS market as we discussed, and for that default spread, the default spread is 2.65%. We will again take the Brazilian reais rate 7.02 and we'll deduct it from the rating based rate, and we get the risk-free rate in Brazilian reais as 4.47%.